All right, I have two questions for you. The first one is, how bad or good do you think my third week was here in my 90 days to first payout challenge? My second question for you is, there's one thing that is more important than winning or profitability when you're a new trader. Do you know what that one thing is? And are you applying it or leveraging it to help you get to the results you're looking for sooner? Well, let's just cut to the chase and dive right into these two questions. All right, so here's what I'm going to go over today. And I guess the first item on the agenda here is to go over the results from the third week. So flipping over. Mixed results. Here is the third week right here, which shows is the fourth week in TradeZella, but we can see I took no trades on Monday. I took technically 3 trades. One was an accidental kind of thing, so there were 3 trades. Two wins, 1 loss, or 2 loss, 1 win. Wednesday, I took 2 trades, 2 losses. Thursday, I took 2 partial wins, and then Friday, I broke even. And so for the week's statistics, that gave me a 44% win rate, a trade expectancy of negative $14, and you can see the average win and loss ratio right there. So I want to dissect, and of course, I switched this to show the dollar amount, and originally I was just doing the R factor, but that was kind of confusing and not clear to see. And there was a point behind that because I wasn't caring about the dollar amounts necessarily. It was just, was I losing 1 risk, 2 risk per day, that kind of thing. But it was easier to flip it over to dollar amounts, so I went ahead and did that, leaving me at the results for the end of the week at minus $139 on the account. So got mixed feelings about that, but I got a lot to share that I'm excited to share, and we can just scoot on over into that. So for this week here, there were some lessons that I had applied from the previous week. And with both TradeZella as a tool to track my data and my journaling, I'm able to look at the entire week and see where the shortcomings in my trading is. And so when I looked at the previous week, there was one blatant thing that I saw that really screwed me last week, I guess. And that was that on my trades, all of my good trades, I went break even. And I can even kind of maybe pull that up here and show you. So documenting last week. So here's week 2 in my trading data. Get this visible. All of these blue ones here are break even trades. So I had 1 win, 1 loss. All of these were break even trades that should have been winners. And so if you can imagine how my week would have changed if I had 4 more winners applied to this week, right? It would have been a big difference. This week would have been significantly green. It would have offset this week's losses, and it would have offset this current week's losses too. So one of the lessons I took forward from last week into this week was not to go break even on my trades. And that was actually something I'd been doing for quite a while. So there was a bit of a psychological thing going on for me, just, fear. And wanting to protect my accounts and protect my capital. And so this entire week, I didn't go break even on a single trade. And I'm pretty happy about that. That to me was forward progress. The other thing here, I'm going to actually go out of order, is risk. I increased my risk. Obviously, trading with like 1 micro, 2 micro, like that's going to get you nowhere quickly. And that was fine for the first couple of weeks because I just wanted to get my feet wet, just get comfortable again back in my funded account. But I obviously realized I'm not going to get to my payout goal if I stay 1 or 2 micros. So the thing that I did accomplish this week was I increased my risk towards 3 or 4 micros and essentially doubling my risk. So I feel like that was a win right there, being able to push up the risk a bit. And I'm only down roughly 1-ish R, 1.5 R on the week with the increased risk. So that feels okay to me. That's something I can absolutely recover from. And then the other thing that I applied this week that was super helpful is I applied a standard operating procedure to my trading. And it really took out the emotion. It took out a lot of the guesswork, and it made it more like a business. Like a business has, operating procedures that say what they do and where they do it and when they do it and why they do it. And in trading, it can be a little ambiguous. You're like, I don't know. Am I trading today? Are the conditions good? What's my bias? Is this looking good? Is this high probability? Is this low probability? And I feel like for me, I can overanalyze things. And so one of the lessons I applied from is this was a recommendation from my friend Chris, and it comes from Casper SMC, was to apply the standard operating procedure to my trading. And I don't have that fully, I did it in my head and I did it as a rough checklist, but it's basically looks like this, and it's not done yet. I originally just had my trading plan, right? It was like, okay, I'm looking for a higher time frame level tap with SMT, and I had my criteria in my checklist, which was helpful, right? Like I knew exactly what I was looking for at any point in time. But for some reason, for me, something really big shifted when I thought about it from this perspective of a standard operating procedure. And that looks something like this. The first is the key levels for doing business. And I think the doing business is a important wording here in this, because for me at least, it shifted something. And all this is on a higher time frame. I'm identifying key levels where I'm going to potentially engage in the market. And so if price is sitting here, somewhere in this zone, and I identify that I have a key level up here that I'm interested potentially in seeing something, and a key level potentially down in here, right? I got these key levels marked. I'm just kind of chilling and I don't need to think. And now that I've identified that, like here is maybe here's some, equal highs, right? And for me, I am always hunting equal highs, equal lows. And maybe price comes up into here, and I would typically be like, well, here's my model. Maybe I should short it. Well, I'm not going to, because I didn't pre-identify it as a level of interest. I will let it go, and it's a filter. I don't have to do anything right here. I just got to wait for price to come here or here. And so that really kind of freed up some mental clarity for me. And in my case, I'm looking at previous week, previous day high and low. I'm looking at Asia or session high and lows, and then any 1 hour plus swings in fair value gaps. So for me, that just made a giant filter. And the second thing on my standard operating procedure is the when, like time to do business. So if it's not in a time window, I'm not interested. I'm not looking at the charts. I got nothing to do. And the third part of the standard operating procedure is the confirmation to do business, which is basically my trading model. And that's why I don't have this finished yet, because I need to build my trading model into a standard operating procedure as well. It kind of is down here, which you can see the overlap between the two. But ultimately, I'm going to get this a little more detailed out. But basically, if price comes into a key level that I've already predetermined at a certain time that I'm okay with, and I see the confirmation, which for me, the confirmation is going to be my model. I have two models, depending on kind of what I'm looking at, the IFVG or a breaker IFVG. If I get all these confirmations and all the sub confirmations within that model, well, then it's just go. And that helped free me up a little bit. But it brought the question in terms of what to do when it doesn't align with your bias. And I don't have that detailed out in here. But for me, the answer was going to be, because I noticed a lot of the times like trades play out against my bias. Or in the case of this week, and I'll show you this. Let's go back here. I was off sides entirely these 2 days, which isn't the most typical for me. Obviously, it happens to everybody, but it's just not one of the things that tends to happen to me nearly as much as other reasons for a losing trade. So here, these 2 days I was off sides, and I think it was at the end of this day that I started thinking about the standard operating procedure and starting to write it out and implement it for the last 2 days. Well, had I been willing to take a short trade, maybe these 2 days would have been break even, right? Or even in the green. I don't know. Obviously, hindsight's 20/20. But what that means is, in terms of my standard operating procedure, I'm also going to remove in this industry, we have such an emphasis on bias, especially in the ICT community. And I see it both ways in terms of like how important bias is. But I also have a lot of instances where it's like I've seen my trades, and if I just would have flipped short instantly, like maybe I take my model on a long, and then it stops me out, and then that same macro, I see my model as a short. Those are often winners, I've noticed. So that to me says I need to have criteria for what happens when a trade comes to a level and it's opposing maybe my general bias, right? Something like go in with 50% risk, still take the trade, go in with 50% risk. And that's going to be one of the things I'll be testing going forward. But the idea of having this standard operating procedure and just thinking about I'm doing business at certain levels was a big mental shift. All right, then. So going forward this week, I have 3 big things that I'm gonna be working through, or adding into my trading to try to improve the things that kind of screwed me this week. I've already talked about this one, which is being a little more bias neutral and not marrying my bias, being more malleable to the charts and what the charts are showing me. That's what I talked about up here when I was talking about the standard operating procedures. And then the first thing was one-to-one W's. So one of the things I noticed when I was gathering the data this week was, and for me, I pull it out of TradeZella and then I kind of look at it like this. It just helps me be able to make my general notes and come up with the biggest improvements for the week. So like, for example, one of the things that I noticed is all of my winning trades. So the way I would typically play it is if I take a loss, like here's Friday, I took a loss, minus 120. And then I took a second shot and I TP'd it 1-to-1 to offset my loss. But that's not really what the ideal situation is, because the data is showing me something different. The data is showing me that my wins, more often than not, give 2.5 plus R. So when I TP at 1-to-1, sure, I'm offsetting the loss, but I'm also not offsetting any other losses. And had I held for longer on 2 of these 3 trades, I actually would have made much more, and I probably would have had a green week. So right there was one big thing that I needed to improve, is no longer doing 1-to-1s after a loss. I just need to hold for the whole 2.5 R. The other thing that I've been noticing, and you'll see it here in all of this data. So here's week 3, week 2, week 1. And you'll notice this improvements column, like did not need stop loss at swing. And I've been more specifically noting this for my winning trades. But ultimately what I'm seeing here is trades like this. For whatever reason, I switched how I was managing my stop loss. And actually, now that I think about it, on my last go around, I was doing really well. I had a month where I had a win, like a month of either green or break-even days, and my stop loss was tucked in fairly low. Like if I was taking this IFVG, I wasn't going down here at the swing. I was tucking it below the gap. And that all of a sudden, like this trade right here, it was a 1-to-1 trade, right? That's what I got out of it. I think I did that because it was offsetting a loss. But had I entered in the same spot, had my stop loss where I used to have it, I'd have gotten 2-to-1 before this first swing even got touched. So that would have made a significant difference in my profitability. And I think there was a period of time in my trading where the retracements were getting much deeper and I kept getting stopped out on winning trades. So I moved my stop loss down to the swing low. And I'm seeing now that that's actually messing with me. So one of my big improvements for next week is going to be tucking my stop loss in a little bit tighter. All right, then. So I want to ask you, looking at this last part here, right? Was this a good or bad week? Well, how would you feel if you were 3 weeks into your challenge? I can reset this data here. So here's the entire week's challenge, or the entire 3 weeks worth of data. 40% win rate. And for me, my win rate's usually 55 or 60. Tons of break-even trades. Not a good thing. A negative trade expectancy. A day win rate of 50%. Usually for me in my past, that's more like 80%. And then an average win and loss of 77 to 68, barely 1.13. How would you feel? I'm actually really happy about this. And this is kind of what I've alluded to earlier on in the intro of this video, as I believe the reason why I screwed up my first attempt at a payout is because the most important thing to me was, am I green or am I red? And then pressure mounted. So I would see things like this. So, well, crap, I'm down on the account. And then I barely pulled the account out of drawdown. And then, oh, my account is still in further drawdown here on the third week, right? If you look at the net cumulative P&L, right? That wouldn't feel good for most traders whose biggest concern was making money, getting a payout, right? But that's not what I'm doing here. I'm not focusing on the P&L. I'm not focusing on that. I made a super easy goal for me. Like I was trying to get a payout on a big account previously, a 250. So I reduced it down to a 50K, right? Payout threshold is significantly low. Psychology, much easier. And I gave myself 90 days to do it. And if you average that out, that's only needing to make $28 a day on average. And I told myself for the first month, I didn't care the results. I said that as long as I am around break even, I think I'm doing okay. And so for me, when I look at this, I'm actually happy because I'll show you. What I'm doing here is I'm working through the kinks. I'm getting comfortable trading my funded accounts again. I'm getting used to these market conditions again after I took a break. And I'm refining my trading. I'm dialing it in. The problems I had in the first week of my trading challenge are no longer existent. The problems I had in my second week of my trading challenge so far are not existent in this current week. And here in this third week, I made a lot more observations that I'm going to apply to next week. And what'll happen is at some point, I will have worked out all the kinks. And then all of a sudden, the profitability will be a byproduct of that. But I'm not stressed, right? That's the big thing that I think most new traders mistake they make is they push too quickly to get into a funded account. They push too quickly to try to get a payout. And they often do. Like you can get lucky. You can kind of gamble at this game and you can get a payout. And I have friends that have done this. I have friends that have had payouts a long time ago and haven't got a payout since. And that's, I think, in part the difference here. And that's why I feel like, for me, myself, as an upcoming trader, I know the difference now because I'm experiencing them. My last go around, I was solely profit focused and I screwed myself and it hurt and it was stressful and I just wanted to quit trading. Whereas now, I don't have the pressure. I don't care when the money comes because I know in my heart that if I just keep trying and keep showing up, it's gonna come. And I also know, like deep down inside, just obviously it's like this knowing that like, well, if I don't care about the results and instead I care about perfecting my craft, the end result of profitability will actually, more than likely, come much sooner. So for me, I'm actually pretty okay. Like sure, the account's a little more red than it was the week before, at the start of the week. But I feel like I learned some incredible lessons. My trading is becoming much more stressful. And I think all of those things are going to carry me forward. So, I'm by and large happy. And it's not to say that I don't experience a few other things, because like how great would it have been to have come out this week with the account back in the green and being able to show profits, right? That would have been a great feeling. But it's all how we look at it with so many other things too, right? And so by having that different mental perspective on this go around, I feel like everything is going much better, even though the P&L doesn't quite show it, because I'm establishing the groundwork for everything in the future, right? So, and as my kid's karate instructor tells them, you have to slow down to speed up. That makes sense, and that works here. So anyways, if you're still watching here at the end of this, I appreciate you taking the time to watch this. I hope you got something out of it for you and your trading. If you want, join me. I'm live every morning here on the channel at 9:30 Eastern time, and I'm going to keep going, rain or shine, until 90 days is reached, and we'll see if there's a payout.